Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So today I want to show you a trifecta that came together that led to this bounce. Oversold, bearish sentiment, and support all came together. And we'll look at the breakout that we've got to see that strong 80% and the gap do support the breakout until proven otherwise. But longer term, I've got some concerns because we still got some bearish breadth thrust in the breadth indicators and deteriorating longer term breadth in the S&P 500. So let's hit these charts. So I'm on the main analysis page here at Trend Investor Pro, and there is a page for free analysis. And if you click on that page, you can see all of the free analysis. It's easy. TrendInvestorPro.com/free is the URL. And the reason I'm starting here is I want to show you two things. First of all, there's a number of free articles here, and I'm going to look at this article next. And then the second thing is the trend composite signal table. Updated every Saturday, I show the recent trend composite signals for stocks in the S&P 500. It's a very simple table. There you can see the stocks on the name column. You got symbol, sector, the trend composite score, which goes from -5 to +5. Green is a bullish signal, red is a bearish signal. And you can see the recent signals by sorting by the recent signals column. And so we got two new uptrends in McCormick and Vertex Pharmaceuticals, part of the healthcare sector there. And then quite a few downtrends because of the recent weakness that we've seen. And that's what I want to cover is the lead up to this recent weakness. And of course, the reversal that we've seen. So I wrote an article on it was the Wednesday after the close before Thanksgiving, and then I updated it again after the big decline on Black Friday because we were going from the trend monitoring phase to the setup phase, and we did it pretty much in one day. We were moving to that setup phase. And so there's a time when you just need to monitor the trend. You know, you've got an uptrend, you've had a breakout and a setup, and you're just waiting for the next pullback and the next setup. And that's where we were the Wednesday before Thanksgiving. You can see we were in an uptrend here. This is a weekly chart above the rising 40-week moving average, so no problem there. And then if we look at the daily chart, we can see we were near this 470 area in an uptrend, and then we got hit really hard on Black Friday. So when we get hit really hard like that, I say, well, where is the next support level going to be, and what am I going to watch for a reversal? And so that's what we're going to do. We're going to see the setup here. So first of all, support is marked by three things. You have this resistance zone that turns into support, classic technical analysis. First thing you do is draw a zone. And keep in mind, these support areas and reversal zones, that's what they are. They're areas and zones. They're not pinpoint levels. You don't say, we're going to bottom at 451.48. No, you say between 450 and 455 is where I'm going to watch for support and a reversal. And the reason I picked that level is because broken resistance turning support. You can see we retraced 38 to 50% and the rising 50-day moving average. And so that was my area that was pointed out on after Black Friday, basically. And you can see the decline here had a move of below -80% for advanced decline percent. And that showed really strong breadth on the downside. So now we're in the pullback mode and we're waiting to get to that setup zone. So this is a piece from the commentary on Wednesday, December 8th at TrendInvestorPro.com for subscribers. I'm looking at 5 different oscillators to define oversold for SPY basically. I've got the momentum composite, which I talked about the week before, and it hit -3 and -4, so it was very oversold. And then you can see I've got the percentage of stocks above the 20-day simple moving average in the S&P 500. That got below 20% oversold. We have the 4-week high-low percent. That got below 40% oversold. And we've got the percentage of stocks above the 50-day moving average. And that got below 30%, which is oversold. And finally, we have 13-week high-low percent, which got below 20%, minus 20%. So all 5 of these were oversold. And actually, this is the first oversold readings that we've had since September, October. Well, we had some in September here, but we didn't get this extreme oversold until it was September, October 2020. And we got just below the 50-day moving average, which is an oversold condition of sorts. So everything was screaming oversold on the 30th and the 1st of December. Now, I will admit I didn't note it at the time, and I noted it this week. It's just kind of a hindsight thing, but we were watching the oversold situation in the S&P 500 and that 450 to 455 area. But there are 2 more things that were interesting here that we're setting up as well. In addition to being oversold in a potential reversal zone, the percentage of AAII Bears got above 40%. And the green lines here shows when it goes above 40%. It doesn't always nail a bottom. You can see here in 2018, you got 3 readings and then you had that plunge in late 2018. But sometimes you do get a bottom there. And you can see in 2015, you got above 40% bears, but still had a dip. And then you got pretty close to the bottom here in 2016. So this is a sentiment indicator that shows when you have excessive bearishness out there. And then the other one down here is, of course, the VIX. And the VIX got above 30. So it had been low for months, all of 2021 pretty much, except for the beginning. But now it got back above 30. So it was screaming that there was a lot of fear in the market as well. So you have oversold, you have fear, and you have a potential reversal zone coming together. Now you just need the catalyst, and let's look at that. So here's the current chart for SPY, and this is up to Wednesday at 11 a.m. when I'm recording this. So we've got this move down to the potential reversal zone here, and what a battle. You know, you have this really sharp decline, you have a bounce, you have another decline, a little bit of a bounce on, that would be Friday, that was 3 days ago, and then you have this big gap up. And that is a big move and a big breakout and follow through. So we do have a bullish breakout here. And if I put on the inspect button here, I want to show you is on the 2nd of December, which would be the Thursday, you had a big advance and you had an AD% day that was above 80%. That showed really strong breadth. And then we got follow through, not really on the Monday, but definitely on the Tuesday. And so we got follow through and a breakout there. And so that is short-term bullish. You know, I don't know where these long candlesticks come from because it's not StockCharts. The data is fine because I've got it too on my other data sources. But, you know, come on, the SPY didn't dip below 460 during the day. Can you imagine if you got a sell order filled at 460? On Tuesday? That would be crazy. So it's not StockCharts data. This is on all the data feeds out there, but I don't know where these spikes down come from. But right now, this breakout and gap are holding, and you can see this gap zone here. So if you close below, call it 457.5, then you fail to hold this gap and breakout, and that's when you have to reassess. Now, one more thing, if you look at the 2 updates we've had on Monday and Tuesday, they were above 70% for 80%, and that is pretty strong as well. So 3 of the 4 days have been with pretty strong breadth, pretty impressive. So I think the bulls have regained the edge as long as 457.5 holds. And you can do this for a lot of other ETFs and stocks. They had sharp pullbacks, they consolidated, battled for a few days, and then broke out with those surges on Tuesday. Well, it's important that those gaps hold, because if those gaps fold, then that's going to be a sign of weakness. Now, I do have my concerns because we've had some negative breadth signals recently because of the carnage we saw over the past week and a half or so. And I alluded to that in the commentary on Wednesday at Trend Investor Pro. And the first thing was Look at these bearish breadth thrusts. This is the 10-day EMA of 80% for the S&P 500, the S&P Mid-Cap 400, and the S&P Small Cap 600. And all three went below minus 30%, red bars there. And that is the first time since March 2020. And then you can see the February COVID crash was preceded by a breadth thrust on the downside. Now, just because you get the breadth thrust doesn't mean you're going to have a crash or even a bear market, but it tells you that people are spooked out there because you had a lot of downside action. And then the other thing that's got me concerned is the deterioration in the percentage of stocks above the 200-day and 150-day within the S&P 500. This is S&P 500% above 200-day, peaked back here in the summer and lower highs, even as the S&P 500 makes higher highs. And so it dipped below 55%. Now this is part of my breadth model, and it's got to go below 45% to turn bearish. But it's, it's just steadily deteriorating as the market moves higher. So you got fewer stocks participating. It's still at 68.5%, which is technically enough to support a bull market. You have more stocks above the 200-day than below it. Then we look at stocks above the 150-day. It's also deteriorating. Got a big thrust up here, but let's see a breakout and some real expansion in participation to get this reversed here. So deterioration is a yellow flag. It's not actually bearish until you get a move below that 35% in this percent above the 150-day. And this is part of my composite breadth model, and I will be monitoring it every day and every week. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.